Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. On today's episode, we're coming to you from the same place we always do. We're right here in the heart of Foggy Bottom, George Washington University School of Business, Duquesne Hall, right here on campus. And a big shout out, obviously, to Duquesne's family for this fabulous studio that we're shooting from. Today's episode by the GW Investment Institute, we're going to be talking about what we actually do in class, which is market news. So today's episode is going to feature a bunch of different companies, not just one company, but some of the companies will be a preview to some further episodes. And we talk about some of the same companies over and over again because they are, by the way, important. Nonetheless, let's kick it off. So what's happening in the markets? There's a ton of stuff happening in the markets. Today is October 21st, so this is the 21st day of the government shutdown. One of the things they made easy for us is that they started on the 1st, so now it's October 21st, so 21 days of the shutdown. Very easy to keep track of if you're looking for a silver lining for this setup. We all hope, obviously, the government gets open, they figure out some sort of solution, and cooler heads prevail, and they get things running. The troops got paid. So that puts a little bit less pressure on everybody. But hopefully, cooler heads prevail, as I mentioned, and let's get this government open. Let's get back to business, everybody. Let's make it happen. What's happening in the business world? Because these things continue to move forward. Well, earnings season is in full force right now, and bank earnings came out first. The big banks, JP, Morgan Stanley, Goldman Sachs, they all are doing super well. And so there was a comment by Jamie Dimon, if you're following the earnings announcements, talking about some bad loans, and particularly on some of the regional things, cockroaches, and there could be other cockroaches, and so some of the regional banks had sold off. But the earnings for these companies tend to look very good. So if you look at Fifth Third, going to do the acquisition with Comerica, not bad. And Zions Bank, which announced, obviously there's some, let's say, particular issues that need to be resolved, but that is in any time period. But overall, the banking system does not look like, at least by my estimation, not investment advice, as a reminder, educational, entertainment purposes only. These things do not look like 2008. This does not look like the same credit situation that we had in 2008. I think there are some concerns in the regional banks. You always have to look out for bad actors, frauds, and other things. And that's always the case. But it doesn't look like there's some very large existential threats to the regional banking system, and certainly not the way that they looked in 2008 and being much, over-levered or very over-levered, especially compared to where the capital situation is today and how well capitalized, especially the big banks are right now. On the regional bank, I think one of the things that's likely to continue to happen is further consolidation. And you saw that with Fifth Third and Comerica announcement. You saw Capital One buying Discover, and I think you're going to continue to have these regionals or super regionals and some of these bigger companies, Capital One as an example, continue to grow market share, continue to expand. So now, Capital One, for example, is going to have the card network that Discover had, and so that puts it in competition with Visa, MasterCard, American Express, and now it'll have its own system. And so we'll see how that all plays out. I think that's an interesting place to follow and to understand. And on the big bank side, JP Morgan did really well. Goldman Sachs did really well. Morgan Stanley is doing very well. And so at the very large scale, these banks are doing super well. And I think that portends well for all of us in the economy in general. Now, everyone has been talking about this tale of two economies. And even Coca-Cola announced today, and they're saying something similar. Their shares are up 3.25% today on the announcement. Things are good. But they're also, the CEO was on CNBC, for example, talking about that bifurcation between the high-end consumer and the consumer that's not as well off. People making $150,000 or more, for example, or wherever you want to put the break point for a household, and saying that those consumers continue to spend, and those consumers continue to spend on Topo Chico and these other things that are at the higher price points. But overall, things are going well. The premium drinks obviously are selling a little bit better. But what's the setup here? Everyone's trying to figure out what's driving the consumer. And if you look at the consumer data, you're trying to figure out, okay, where are the pain points? And again, Everyone's talking about this bifurcation. I think that's something as an investor, as a business person, as an analyst that we absolutely need to follow and figure out what's happening there, because that's going to tell the story of what moves forward. Are these luxury brands, for example, a place to be? Is Coca-Cola just a place to be? And we own shares in Coca-Cola, and so that I think that's a good place to be right now. It's obviously up today, so that's a little bit self-serving to say that thanks, we were right. But Coca-Cola is in the portfolio. We're watching it carefully, and again, they have a portfolio of products that can help any of these consumers, find the right thing for them. And so, they're getting a few shots on goal with the consumer, not just the high or low end. So that's an interesting place to be. And Coca-Cola also talking about how they're using AI for sales, for example, and how they're already starting to see some efficiencies, for example, on the people that are distributors of their products, these mom and pops, retail outlets, and how they're able to use an AI to help them decide, for example, what mix that they should be selling, what sells in their area, what's popular. And I think that those efficiencies we haven't seen yet. We're going to start to see those things. And I think it's very interesting. And if you use Coca-Cola as a lens to watch some of this play out, how is AI actually going to roll out? So we hear so many headlines around, artificial intelligence, and you hear a lot about ChatGPT, and we'll come back to that. And you hear about Grok, and you hear about Gemini, and you hear about Anthropic. But what does that actually mean for businesses? How are they using it? What are the use cases? Well, you're already seeing this. And again, I encourage you to listen to the CEO of Coca-Cola if you're curious, him talking about the sales piece being a part where that makes a lot of sense to use, and having that AI be really at the front end for these retailers. Again, mom and pop as an example, which is the vast majority of their distribution points. And those people figuring out, hey, this is what maybe I need to stock. This is what makes more sense. So that's inventory management. That's demand response. And so all of these things are happening now. And I think it's important as a business person, investor, analyst, to really follow that and really to try to understand, how that's then going to play out, because those are big efficiency boosts that potentially come in. Another company that I want to talk about in particular, and we've done an episode on this, and we're very likely to do an episode in the future on this company, is Taiwan Semiconductor. And it announced earnings, and it blew it out. And so things are going very well at Taiwan Semiconductor. And so TSM is the ticker for that. Again, non-investment advice. TSM makes, 90%, depending on how you count things, but really a vast majority, certainly of the high end, the 3 and 5 nanometer, and they're pushing down to 2 nanometer. Most of these chips are now made in Taiwan, but they are opening facilities in Arizona. There's some clips online. If you go out and see it, you can start to see how some of the things that they're working on in Arizona for the fabs there, and they're moving some of the higher end production over time to the U.S. to diversify that supply chain. And certainly the customers here, like Apple in the U.S. And NVIDIA in the U.S., would love to have some of that supply chain be closer to home and closer to them. They manufacture those chips. If you didn't know that, for example, they make the chips for Apple, they make the chips for NVIDIA, and anyone that doesn't manufacture their own chips, which is most of the companies you probably hear about. So one company that you have heard about that manufactures its own chips is Intel. And if you haven't been paying attention, Intel is having a tough time. Now, they're working their way through, and certainly Pat Gelsinger left, and they have a new CEO, and they're really working forward to figure out what's the strategy, the government taking a stake in them. So Intel is both a fab and a designer, unlike Apple, who's a designer and has Taiwan Semiconductor manufacture the chips. And so I think Taiwan Semiconductor is a company that you should be paying close attention to. Really, this is at the heart, or one of the centerpieces for the AI world. They're really, the manufacturer for all these high-end chips for all these companies. And so I think it's worth paying attention to and making sure that you understand as best you can Taiwan Semiconductor. Obviously, you don't need to get over to the plants and kick the tires there, but you can find videos online and you can understand what they're doing. So I think, again, that's an important piece to talk about. And we'll spend more time on Taiwan Semiconductor in the future. But I think that's worth paying attention to. Another company that we just talked about that I think is that's worth paying attention to in the short term here. One of our large holdings, and we've talked about this company a lot in the past, and that is Apple. AAPL is the ticker for Apple. And Apple, you know, lots of people have had many criticisms, including right here on the show. We've talked about, well, what is the AI strategy for Apple? And maybe they're being left behind. They don't have their own models. They don't seem to be competitive in this world. For example, with Google, who has Gemini, and maybe Gemini is not the top model. Maybe the top models are Grok, ChatGPT, and Anthropic, and Gemini is a fourth. And depending on where you put DeepSeek and others, maybe further down. But they still have their model. They're doing things. They're integrating in their products, and they certainly have a path forward on the AI front. They have a big cloud business, and so that's something that, again, there's been criticism for Apple for not having their own setup, their own models, their own really, really specific AI, push, AI solution, AI plan. Now, the countervailing force here is that they launched the iPhone 17, which we did mention, on release day, and we talked about that. So, what has happened since? And people have been watching and waiting, very carefully to see, how the sales going to go for the iPhone 17. I think the 16 was a disappointment. Lots of people thought, well, there's going to be a refresh with AI and some of the new features that were included that could only be accessible, for example, on the 16. Didn't really materialize in the way that people had thought, and certainly not at the scale. That's now different on the 17. The 17 has been a hit in the US, has been a hit in China, and sales are largely ahead of where most people expected. And so the uptake and demand for the 17, the refresh cycle seems to be much higher. Dan Ives, who was on the show, analyst at Wedbush Securities, I would check out his stuff talking about what Apple's doing with respect to the iPhone 17 and the success that they're having in the refresh cycle being stronger than expected. And so that gives you some pause to think about, well, maybe Apple, the counter argument for Apple on the AI side is that maybe they're doing exactly what they should be doing. And this is sort of in the same playbook they've always run, which is, hey, we're not going to be first. We're going to sit back. We're going to wait. We're going to be careful. We're going to be cautious. We're going to continue to upgrade our platform. We're going to continue to upgrade our chips, which they got in the business of doing, having their own chips in the M5 as an example. And we're going to continue to push hard on that vertical integration on our software and hardware. And we're going to keep making that better. And that seems to be working for the 17. And we're going to watch and wait, and we're going to figure out what's the best AI solution for our 1.5 billion loyal users. Now, I have an iPhone right here. Many people have an iPhone. And so it's a very sticky product. And so even if, they are starting to fall behind in some ways, that platform is super valuable. Obviously, the economics, they control a lot of that. And I think it's going to be challenging for others to put real big dents in that, at least in the short and medium term. And I think this has been shown now, at least in small part, and maybe in a significant part here, on the launch of the 17. 16, maybe not as strong as people had wanted, but the 17 seems to be quite strong, both here, both in China, the two most important AI markets for sure, and the two biggest economies in the world. They're having success now on the 17. And a lot of people were uncertain about that. And certainly, again, now that's been reflected in the share price. And so you've had a pretty strong move. Apple's kind of going nowhere, but year to date now, up 5%. And it popped up yesterday on that news, now hitting a 52-week high today, October 21st. And so, again, a real turn here on the story for Apple. And I think it's certainly important. And it's really important to pay attention to what's going on there. Another thing that I want to mention, and Apple has a deal with MP Materials. And the reason I'm mentioning this company is because this is a rare earth company. Mountain Pass is the MP, and that's Mountain Pass, California. And this facility was shut down, but it got restarted, and it's in the rare earth business. And really, China controls 90% of the refined production and products that come with those rare things. And you think about, okay, well, what are they used in? What are these rare? I've heard of these rare earth things, but I'm not even sure what they're for. They're for magnets. So you think about the permanent magnets that go in electric vehicles. You think about electronics. You think about defense, tech. And so all these things are super important components of rare earths, or components of those really high-end materials, wind turbines, and other things. And so they're very important. However, China really controls the supply. They put out some news that they're going to really restrict that. That seems like that's part of this trade tension, a negotiation between the U.S. and China, and the Trump administration is working on that and has a November 1 deadline, which is quickly approaching. And then the Trump administration just signed a compact with Australia and saying that they're going to team up and work together to help resolve some of the bottlenecks in the supply chain for rare earth materials outside of China. Those are all good things to reduce the pressure for someone controlling so much of the supply of rare earth materials. And really, it's on the refined capacity. It's kind of a misnomer. Rare earths are not that rare. What's rare right now is the refining capacity and the ability to turn those things into products. There are things that are on the high-tech side that are being developed, if you'd care to research those, that are iron nitrate, for example. So there's some experimental companies, or there are companies working on experimental projects with iron nitrate as a replacement for all rare earths, for example, in the magnets rather. And so that's something that I think is worth areas for further research when we talk about. But how is that going to impact the market in the short term? Hard to know. Can they get that stuff done at scale? The Department of Energy has some projects with some companies working on some of those more advanced technologies that could actually replace that. And so, substitutes can come into the market, and maybe iron nitrate is one of those things. Right now, there are not many substitutes for those rare earth. When you talk about the high performance magnets that you would need for electric vehicles to create that type of performance and efficiency that you want for long range vehicles, for example. And so those things are super important, and defense tech would be another part of that as well. Think guided missiles as an example. And so those things are important, and I think that's going to continue to be part of that negotiation between U.S. and China during the trade negotiations, again, quickly approaching. But that compact with Australia puts a little bit less pressure on that situation, and obviously gives the U.S. a little bit of wiggle room there. Now, that doesn't solve anything in the short term. And then so you've seen a company like MP Materials really pop the year to date here, up 396%. Not investment advice here, but just goes to show what's actually happening. That company doesn't have any earnings, for example. And if you just do a quick pass on the financials for the company, you can see that a lot of this is built on speculation for what they can do and where they can, be in the market. And so $13 billion market cap kind of from out of nowhere on revenue of $242 million and no earnings, right? They're losing money. They have negative $190 million in free cash flow. And so they're spending money to get up and running. And so maybe this will materialize into something significant. Maybe it won't. But right now, really driven on the news around that. And so I think it's important to pay attention to what's happening in this world of rare earths. But it's also important to understand that a lot of this could just be pure speculation. And none of this really turns into material, earnings. And so, but again, if you want to watch a company that's a proxy for this market that's publicly listed, I think MP Materials is something to watch. Ticker is MP. And again, non-investment advice. This is very speculative, and I'm only mentioning this stock because the rare earths is such an important part of the news cycle right now in the investment world. We are not invested in this company, and using the GW Investment Institute framework, business management, price valuation, balance sheet, we would probably not recommend this company, just to be super clear. But it is, if you want to learn about the rare earth business and market, I think it's an interesting company to follow. And so, again, lots of different news happening. Another part that I'll mention is that the dollar has been, generally weaker. And if you look at sort of gold, has been the opposite trade of that. And so gold has been on the rise. The dollar has gotten weaker. And so if you think about people wanting to buy U.S. productivity, they're buying U.S. shares. If you're outside the U.S., if you're denominated in euros or RMB or whatever it happens to be, you buy U.S. productivity, and how do you hedge that? You hedge that by buying gold as well. So then you're dollar denominated, but you're hedged in gold, and so you get the productivity and you get the inflation hedge. I don't know how many people are doing that, but it seems like certainly there are people out there thinking about this because gold has been on the march here. Another thing worth mentioning is, if anybody was paying attention yesterday, Amazon was, in the news, and not in a good way. Amazon Web Services was down for the day or part of the day in the morning in particular. And so the Northeast node, or right here in Northern Virginia, close by, across the river from us, close to our Virginia campus, by the way, down the street, for Amazon Web Services and some really notable websites, Instagram, Netflix, Hulu, impacted some of these things. Obviously, maybe you were impacted as a customer, but curiously, the share price yesterday moved up, and the share price is up today again. And so it is quite interesting that an outage would actually increase the share price. One of the things that's probably worth noting is how concentrated cloud services are, and I think that highlights that. Amazon, a third of the market, Azure and Google dominate, and Oracle coming on the scene now too. And so really these four control most of the market, certainly at scale. And maybe that's a concern for some people. Maybe they'll try to figure out ways to diversify. Very challenging to build that type of scale of infrastructure and replicate that in the short term, and certainly have reliable providers. You're going to have outages probably almost in any business. So it's curious, maybe the market just took that in stride. Everything seems to be mostly resolved at this point, 24 hours later plus. But it's interesting that the shares reacted positively and they're up again today. Maybe that's on the news that things seem to be not as big of a deal as maybe some of the news outlets made mention of. But again, I think it's important note to talk about how important these large companies are in that cloud business. So that is Amazon, that is Microsoft, that is Google, and that is Oracle now. And so pay attention to those companies for the cloud. There's so many things going on. And as an analyst, as a business person, as an investor, you got to decide what to focus on. That's just, some of the market news that we've been focused on. And part of that is around the companies, what's happening on the consumer, what's happening in the banking sector, obviously what's happening on tech, Taiwan Semiconductor for the AI trade, what's happening with Apple, one of the biggest companies, up big, now in the 4 trillion market cap, territory for a company, 3.9 today. And so all these things are happening all at the same time, but that's part of the fun. That's part of the puzzle, to put all this together, to try to think about, where we should be allocating capital for our portfolio, and what companies that we'll be buying and selling. And that's coming up here at the end of the semester. Our students are hard at work, and they've been hard at work this semester. So we're grateful for their time, their effort, and their energy. We look forward to their pitches. That's it for this episode. And I would like to say, if you're enjoying this, please tell your friends, subscribe to the show on YouTube. And thanks for those listening in on the podcast, on Apple, on Spotify, on Amazon. We look forward to seeing you on the next episode of Market News. For Rodney Lake, thank you. Disclaimer: the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.